Wow, what a day on the market. I got my buy the F and dip shirt on. Welcome to the No Glove Show. My name's Josh. Let's hop right into it. Inflation data came in about as what the market expected. So we saw like a lot of, I would say, indecisiveness, no volume. Market's not really sure which way to go. I was just sitting here confused. It looks like we hardcore trended with TLT today, so everyone's just kind of looking to see what the bond market's anticipating, what the future economy could hold. And there's a lot of things going on. Now, today on the news, we saw headlines saying that Russia may pull back their tensions with Ukraine down a little bit. We also saw some headlines about Omicron not being that lethal, and that it was just minor symptoms. Most cases, there has been some outbreaks here in the U.S., but there hasn't been many hospital cases. So that's great. That's a lot better than the headlines we're getting last week, although, like I reiterated last week, I don't think the market's been trading off the virus to begin with. I think pretty much right out the bat, most of the market was pretty much just okay with that. We're over it, is what I rather should say. And we're all worried about this economic changes. Now, are we out of the weeds? No. Next week on Wednesday, we had the Federal Reserve Conference, and I think they'll likely start talking about how much they want to increase their tapering. Now, they have already reiterated to us, just like with the inflation data today, they've already reiterated that they intend on accelerating that. And if you look at the bond market, it's pricing in about 3 rate hikes that start in June. I think now they've said that they would like to do the first rate hike in March. But if you even look at how high these rate hikes are anticipated to get, it's still not that high historically, although the financial system is so precarious right now that it's really iffy on how the market will anticipate that. But just know that just like with, even though the inflation data was the highest we've seen in a long time, there was also all the market was given time to acclimate to that new condition, and it didn't seem to panic. And the dip buying that we're seeing is still aggressive. I mean, we're a few dollars off the highs for SPY. And so this is crazy. And so a lot of these stocks, they're over. KRNT is a stock I like, 3D printing company for clothing. They're oversold. Doximity is oversold. Roku had that monster run and then had the pullback, but we even saw them moving into the close fairly well. Snapchat has been getting a bunch of momentum, but did really poorly today. Again, kind of pulling up into the close. Mara, I think, is at a great spot. I think cryptos are probably this is Ethereum has been sitting around 4K for so long. It's been probably the most stable cryptocurrency, and we've reiterated this in previous videos, so I'm not going to get into that, but the short flow on there is getting really, really small. It's as we continue every day, I'm like, holy cow, it keeps shrinking. This thing could, whew. And if you look at the options trading for Ethereum and Bitcoin, they're so unbelievably bullish. There's still a massive amount of contracts anticipating Ethereum to go to 10K. And that might sound, absolutely ridiculous. But the thing is, with how that short flow is, it's squeeze potential there. It's for real. It's real squeeze potential there. I'm so bullish on these cryptocurrencies, especially since we're getting more national events where people are just getting together and talking about them. We now have Bitcoin being used for loan collateral through the development of bonds, Bitcoin-based bonds, and Goldman's actually leading the way on that now. So that's interesting. I guess you would say that the president of El Salvador led the way, because I think he was first and then Goldman followed. But it doesn't really matter. Anything positive happening in the cryptocurrency is good for all of them at this point, because it's so new and it's great to see. So I'm super excited because we could just see a monster Santa rally from here, because we've been so. Now I'm not saying for sure, but if these headlines keep turning back this threat of war, and granted things are still rough, but market seems okay with the inflation. Market seems to be caught up on the shortage supply market. Seems, it could seem irrational, but also understand like the rest of the world isn't doing so hot. Money allocates to us. Passive market melts up. It's what's been bringing markets up for a minute, and then we're getting more hints of stimulus, and there's this political change going on, and then we had the cryptocurrency hearing, and a lot more of the constituents of the government were more well informed and more positive about it than I thought, and that's big and exciting. If we continue to see more positive headlines about crypto, more excitement about new technologies, it could be enough to bring some euphoria and inspiration back, because really this market wants to go up. It's even during this week on those down days, the up days were bigger than the down days, and I covered this in the long form podcast Spacing Out, but that's just incredible to see. And so if we come into this Santa rally, and even coming into next year, there's so many stocks, there are so many opportunities in a lot of these mid caps. Even a lot of these companies are, Kohl's is an example of that. Kohl's today had news that their real estate business was almost worth as much as their market cap. You have to think that would be the book value of the company is almost as high as the market cap. So, most companies trade at multiples of their valuation that's based on their expected growth and earnings. Now, it's nearly trading at a 1-to-1, which is it's just incredible. The company could liquidate for its market cap. So, when you buy something like that, you're literally, let's say the stock dips and it dips below that. You'd be literally like paying $1 for $1.50. When a company, after crashes, that's what you want to dig around for, is which of these companies can sell more than are trading for less than their liquidation, because then I can pay $1 for $2 in some extreme cases. So, but I mean, that's for a market crash. I don't anticipate a market crash. I'm fairly bullish now. We got past the fears that I had. Market kept going. Like I reiterated in the long form podcast, I really just wanted to trade that, as it came in, just to see how the market react. Market seemed fine. I shared it in the Discord. We did scalp some SPY calls for like 70% on the upside. Got them a little too early. Holding those until close is tough, but that market rally into the close, I anticipated it, but to watch it come through was incredible. So, and of course, if you sign up for the Get Ditters package, you can see all my trades. You can see my call outs when I call those out as well. And so make sure to check out the link in the bio, check out the Discord. We're also doing a sale for the Get Ditter package where you can get 50% off for your first 3 months. If you want to check that out, also have a free week trial. So if you just want to use it for a week, see what it's like, see what kind of info I give, maybe hop in the live stream, say hi. You can do that as well. So I think that's about it. I just wanted to do check-in, say, I'm looking pretty bullish. There are some fearful headlines. I don't think anything's really relevant right now. Most things, most fears, I think the market knows about. I haven't seen anything new develop. I haven't. That's the thing, right? Yes, there are fears, but does the market know about it? If the market knows about it, the likelihood of a crash is far less, because there's an anticipation, because there's hedging going on. All right, if everyone hedges in anticipation of crash, no crash. That's how it always is. So, it's looking like a Santa rally. Still be aware, because there's still black swan chances. And, I mean, those will stay high, though. Those black swan events, as the globalization recedes and as less countries are working together, they don't have to rely on each other for trade or products, and a lot of them are pulling back to wanting to do domestic production and stuff, and so a lot of that continuity between them is dissolving. When that happens, you always have more chances of a black swan event. There's always increased chances of conflict or even just more friction when it comes to decision making between these countries. So keep that in mind on the global scale. But domestically, next year will be rough. But right now, everyone's pumped about Christmas. Everyone's excited. This is the euphoric time. This is the most euphoric time of the year for trading. And I would be foolish to say, oh, short it from here. You just can't. So we're going to keep riding the waves. I'm much less fearful than the last time we checked in. And yeah, hop in the Discord if you want to keep constant updates. And I hope you all enjoy your weekend. And I'll probably make after Wednesday, after the meeting, I'll drop another video and give my feedback on that. And maybe even sooner if we get more developments. Got it? Sweet. Make sure, please like, subscribe, and comment down below. And maybe check out the merch store. There's a link down below. We have All I Want for Christmas is a Bitcoin shirt. It's pretty cool. And stay awesome.